Okay, so listen, price has been a bit shitty, and we're reading about some miners are in distress. Hut 8 are coming out. Shout out to Jamie. How you doing, Jamie? They're still keeping every Bitcoin they mine, but we've heard of distressed sellers. I think the lowest the price hit was what, 17 and a half?
Yeah, 17,700 or something.
Yeah, we saw a dip to there. We're back up to like 22 now. But like in my head, my basic rough calculations, having spoken to you, there should be no miner who, none of the big miners should be losing money on mining Bitcoin at 22K at the moment, not even at 17. So what is happening there? Is there like other structural issues with these companies?
So the short answer is, and this is only from my layman's observation of the industry, I think there's not one thing. It's not just one thing that's happened. So you can look at some who, maybe there's some miners who, actually, before we go there, the big thing is that these are not miners necessarily who are unprofitable at the end of the month on their bills. These are miners who thought that they either had access to additional capital, were funding expansion, were paying for future orders of machines. These are, a miner's not selling their Bitcoin reserves to cover their power bill at the end of the month. In these examples, I think much more so, these are miners who are saying, okay, we've planned for X, Y, and Z amount of growth. The way that we're going to get there and finance that growth has changed given the changing market dynamics. We're choosing to liquidate some of our balance sheet to go and fund that growth.
So they're selling them to go and buy machines that they thought would be bought by capital investment.
Well, and let's play out an example. You wake up in the morning, it's November of 2021, you call your Bitmain sales representative and you say, I want to buy one machine. And they say, okay, this machine costs $75 a terahash. You look at the market today, you say, it's trading at about $100 a terahash. So if I'm going to get this thing in 90 days or 180 days or something, that's a great price. I pay you 35% of the price up front. I owe you another payment in the middle, and then I owe you another payment 30 days before it shows up. But Bitcoin goes from 50 whatever, 60 whatever to 17 whatever, 20 whatever over that time period. And so what you thought was a great deal at $75 a terahash now is trading for $35 a terahash.
But you have a contract.
And so the people who lent you the money to go do that, or the people who bought your equity to go do that, are saying, calling you and saying, what the fuck? You're going to be paying over market price for something that you can only, every dollar you spend now is only worth 50 cents in mining assets. So it puts an enormous amount of pressure on how procurement happens within the mining industry. And so I don't know what any individual company situation is, but that's the dynamic that's challenging about some of these future orders, where miners go take out a loan, they're locked in at a price with a manufacturer, and then when it comes to take receipt of that machine or to make the next payment, the value of that machine is significantly below where the contract was struck. And so the people who finance that growth might say, I don't like this deal as much anymore.
Can they hedge that? Are there futures products they can hedge with?
There's a lot of thought and time that's gone into how some of the manufacturers do it. Sometimes the manufacturers introduce adjustable rate contracts. Sometimes there's opportunities to hedge Bitcoin price and get kind of part of the way there. But I think like what happened for a lot of the operators in the space is they said Bitcoin's going up forever. We went from basically, we've gone through three kind of chapters. The first chapter was, oh my God, Bitcoin price is going up. I can't get any miners. The second chapter was, oh my God, we've got all of our miners, but there's no rack space. The third chapter is, oh my God, why did I do any of this in the first place?
But it's that thing. It's trying to build these businesses during volatile times. I remember back in, I'm going to get him on the show, Pascal from Ledger on the show, because I remember back during the 2017, 2018 bull run and then crash, he just said, building a company in these times, this kind of volatility is so hard because the majority of your orders come in a very short period of time. You have to provide customer service, and then the tap turns off. You don't know when, yada, yada. Now, they've had a very, very smooth, very, very smooth couple of years. And so it's because they learned everything during that period. We're the same. Look, everything is a derivative of Bitcoin. Our downloads are our businesses, and we've planned ahead for it. And bear market won't affect the show that we make. We can still travel and make it, but that's come through good planning. I think other people just haven't been prepared for this.
And I agree with you. We think similarly. We think that Bitcoin is a multi-decade, multi-generational, incredible opportunity. Doesn't mean that the water's always warm and smooth. There's chop along the way. And so, planning for those downside scenarios and trying to manage risk first and upside second is the prudent way to do it. And there's operators and companies that are out there within our industry that have done their best and made good conservative decisions and still blown up.
Is there distressed deals out there for the miners? Are you looking at things? Like a shark. A vulture.
I have yet to meet a market that doesn't have opportunity. I think every market's got great opportunities in it. I think that, discerning capital allocators tend to rise to the top over time. And it's about process and rigor much more than it is around kind of, anything sharky.
The empathetic vulture.
The SBF of mining.
You catch more bees with honey, my friend.
Oh man. Well, listen, look, it's super interesting again to watch, to see this play out, because I would have thought more than anyone the miners would be prepared. Yeah, they seem to be so diligent on their numbers, but I guess what you're saying is right. Look, they can't produce the ASICs quick enough. During a bull market, the manufacturers hold the power.
I think it's changing. I think that the level of maturity that we see from existing manufacturers and some net new manufacturers, in this cycle is more mature than it was in 2017 and 18.
Do you think we will see consolidation though?
I think we have to.
And do you think there's any risk of having consolidation in the mining industry where we get a few huge players? Is there a decentralization risk with that? I asked somebody who wants to grow a massive company.
I'd love to be telling you that Bitcoin's decentralization risk has hit zero. I think that mining risk is pretty low. I think that miners are there's not a lot of incentive for bad behavior among miners, frankly. I think that our job is to produce computing power as efficiently as possible, and hand it off to other people who know what to do with it better than we do. And that happens in the form of pools, and that happens, over time. And I'm very bullish about kind of the improvements around, Stratum V2 and some of the stuff that's gone on from a pool decentralization standpoint. I also think that as markets for hash rate mature, it's also another synthetic decentralization of Bitcoin mining, where let's say you're running a farm with 100 terahash, and someone buys 2 terahash from you. Well, now you've got a contractual obligation to deliver them that hash rate in a certain way on a certain timeline. And so as we see, sort of more mature financial products around hash come to market, I think that the ability for miners to behave badly continues to go down.
It feels like there's some synergies with the way energy is bought and sold in the deregulated Texas market to what you will see will happen with the market for buying and selling hash. And do you think that's an alignment between the two that's happening?
I think that where Bitcoin and energy's relationship goes from here is one of the most underappreciated and underpriced things that's happening in this market. I've been watching the conversation around and I'm taking your question in another direction. I've been watching the discussion around the long-term, security budget conversations happen, and I just kind of think they're silly, right? Like there's two things that I think make Bitcoin's long-term viability brighter than ever today. The first is that the purchasing power of Bitcoin continues to go up on a cycle-by-cycle basis, right? We're not crashing to 3K. We're crashing to 17.5.
Yeah, somebody asked me recently about that, and I said the only number long-term I care about is what is the lowest price Bitcoin hits each year. Not the highest. I mean, it's interesting, but the lowest price it hits each year, that is trending up.
It's trending up. So, so that's the first thing that I think is solving this this sort of, long-term incentive structure thing. The second is that, I just don't buy this idea that the full spectrum of the incentives for miners is captured by the block subsidy plus the transaction fees. I think that in the sort of the revenue space for miners and the role that miners will get to play within large and complex energy systems will unlock net new streams of revenue that are not related to on-chain Bitcoin disbursement. And so whether that comes in the form of services or financing or straight up energy trading, there's just a ton that's going to get unlocked because you've brought a new market participant to a space that didn't have one before, with new opportunities and business models to be built on top of it. I'm incredibly bullish on non-Bitcoin native mining revenues.
Yeah. So after the Adam Wright show we made, Rusty dropped me a DM and he said, the thing I like most about this is the idea when people are discussing, about long-term inflation, should it be considered? What they've missed out is that we will have mining as a service. But me and Danny were talking about that. If there was no block reward, we get to the stage where there's no block reward, and you were talking about these sites, such as the landfill sites, you would be paying for someone to take that methane and burn it and turn it into Bitcoin, but there's no Bitcoin to be created, so you might as well just burn it off. So all you really have access to is actually the transaction costs. Now, if there is still a small part which is coming from the block reward and some transaction costs, maybe you subsidize the difference by paying someone to burn off the methane. But if there's not enough coming from a block reward, what is the mining as a service? That's the one I can't figure out. What is mining as a service where there's no block reward and very minimal transaction fees? I can't figure that one out.
So, there needs to be some transition to transaction fees.
Yeah.
But there is a native revenue opportunity to being a flexible grid balancer, right? Right now, if you go to Texas, there's negative power prices because it's more expensive to shut the turbine off and to turn it back on when you think about the maintenance and the labor and the negative impact to the infrastructure.
So you might as well have a toaster on.
It is immediately positive sum just to offtake the energy.
But what if you didn't have that taken off the energy? How could you get rid of the energy? Is there no other way? Can you not just I don't know?
It ends up getting to somewhere, but the price continues to burn negative. So I look at it and say, all right, well, I've got a great, a Bitcoin mine is a huge capacitor.
Yeah.
So you look at it and you say, all right, well, this megawatt hour is negative $10. And you think, the market's kind of digesting it at negative 10. I show up and I bid negative 9. I'll take the 9, and I have the ability to do so at scale. All I need to do is just turn on my mine, take the power, turn it back off. And so there's 0 Bitcoin changing hands, and I got paid $9 for that megawatt hour.
Is there enough? I guess if enough miners were doing this, there becomes a limit to how many can go out and offer this.
Yeah, I think that's certainly the case. But more importantly, Bitcoin mining economics trends lower on a multi-decade basis.
Yeah.
My main focus is how do we make Bitcoin more useful? Because the more useful Bitcoin gets, the more on-chain transactions there will be, and the higher the purchasing power of a SAT goes. If I focus on those two things and build a great business to mine Bitcoin alongside of those activities, then the emergent technological phenomenon that is money, that is Bitcoin, gets to continue to grind forward, and humanity will prosper along the way.